So welcome everyone. I am so excited to have on the program today, LYNNE LAUBE. I'm Lisa Calhoun, founding managing partner at Valor Ventures, and LYNNE is just coming up on her 1 year as an operating partner at Valor. LYNNE, it's been an incredible year.
It has been fun.
It has been super fun.
Mm-hmm.
Maybe talk a little bit about how you got into VC with Valor. I mean, as a founder, it's not that unusual for someone to make the leap from founder to investing, but you did it, and you're one of the first in this region. So let's talk a little bit about that journey prior to Valor.
Yeah. You know, it's funny, Lisa, I always said I was never going to be an investor because I really like founders and I really want to help founders. It turns out that over and over again, being an investor is one of the best ways to do that. And so I sort of broke the promise to myself because I always felt like just because you're a good founder doesn't mean you're a good investor. Right. And I never wanted to presume that I know how to invest just because I happen to have a company that I started that was successful. So I've been really cautious about making sure that I don't come in here and assume I know everything about investing or assume I know how to pick the right companies. But what I do know how to do is work with founders, and I do love founders. And that's been by far the best part and the most fun part of the job for me.
You know, that reminds me of what it's like to be a founder. You don't know what you don't know.
Yeah.
But you just have to start.
Yeah.
You have to just jump right in.
Mm-hmm.
And one of the wonderful things about founders who become investors is you already have that muscle memory of learning fast and inventing at the forefront of your industry.
Yeah. Yeah.
Well, I'm super proud you're choosing to invest at Valor. You were one of the first tech IPOs of 2018.
We were.
Mm-hmm. Take us back there to some of those lessons learned, taking a
Mm-hmm.
fintech from Atlanta public.
Yeah. Yeah. Well, you know, it was a great experience, but I do want to remind people it's just another financing event. In the end, taking a company public, the reason you're doing that is you need capital to invest in the business. And, you know, whether you're doing it through your Series A or your pre-seed or, you know, whatever round you're doing it in the end, it's just another financing event to grow the business. Now, an IPO has a lot of the sexiness. It was really cool to see, you know, my company in the middle of Times Square. Like it was really, really fun. But the next morning, all the same problems were still there. All the same customers were still there. It was, you know, it was just another financing event. What I did think was really interesting is it was an unusual financing event for the city of Atlanta to have. And, you know, that is what we want to change, right? We want more successful companies should be coming from the South. There's just as much talent here as anywhere else. Why do we have so few IPOs? That's what we need to go figure out how to solve.
Well, I definitely think we're in the right place to have a meaningful role in that. You're very humble, and I will say you're still less than one of 30 women who've taken their startup public as CEO. So although the Atlanta story and the South story is very close to me and dear to me, so is the story of being a woman building a major tech firm.
Yeah.
And I honestly think that some of the reasons we can look to repeat some of your successes here is that the South is still growing its venture firm capacity. Valor is one of the very few firms that lead at seed.
Right. Right.
We don't have that many seed lead firms.
Yeah.
And you know, my eyes were blowing open wide when you were talking about, oh, it's just another financing event. And I'm like, well, from LYNNE's humble perspective, but the IPO began with getting your seed round together.
It did.
And so I wonder from where you've been and where you sit now, how has your perspective changed on the importance of a seed round? Is it important? How would you advise founders to think about a seed round today?
Yeah. I mean, lots of people call it lots of different things, but in the end, financing your company and getting the capital that you need is probably one of the most important things past having a good team with a good idea, right? I mean, good ideas can only go so far if you don't have the money behind it. And the challenge with getting the money behind it is, you know, if you've got a big idea, it's going to take a lot of money and you don't want to get too much dilution. So having a really good seed round where it's small amount of money, usually a smaller valuation, but also less dilution to really, get your company truly into a scalable position is incredibly important. Growth capital, when you've got all sort of the track record and you can say, look, I have 27 customers and I'm making 20 million in ARR, and that growth capital it can be a little easier sometimes, although probably not always feels that way. But that seed capital, that initial kind of, do I have something here? Can I really blow this thing up and scale it? It's just really important to get that, to set the foundation for, everything else that's to come.
Well, there's a lot of different types of seed capital that founders are looking for these days.
Yeah.
And I know we just had our pipeline meeting this morning and we reviewed so many opportunities, and yet it starts to become pretty clear that founders are self-sorting into different buckets. I don't think that founders necessarily have that perspective.
Yeah.
And thanks to you being able to wear a couple hats in any given situation, what do you think is the best approach for a founder in the South, say, looking to have a very strong, very good for them, good for their company, seed round in the next 12 months?
Well, I mean, first thing is, look, I say all money is green, and that is true, but it doesn't always spend the same. I think getting an investor who's not just writing a check, but can truly meaningfully open doors for you, make introductions, give you perspective because they've been there, done that, that can be as valuable as the money. So it is easy for me to say, I know, because I am a founder, but I think having another founder who has been there, done that by your side is probably one of the most critical things you can get as a founder, besides obviously getting money. I will tell you a story. When we raised money for Cardlytics, we had the opportunity to bring another founder onto our board, local guy around here who built a very, very large company himself. And we actually took slightly less good terms to get him on our board. And to this day, I still give credit. His name is Mark. I give credit to Mark. I almost call him my third co-founder. We couldn't have done it without Mark.
No regrets.
No regrets. And, we took, it wasn't a huge haircut in valuation, but we did take a haircut in valuation to get Mark on board.
I think you bring up a great point. Getting mentorship and advice from someone who's been there and done that, so that you don't have to invent every wheel.
Right. It's not that hard. It's just if you've never done it and you're learning everything the hard way and you're doing it all at once, it becomes overwhelming. But having the ability to pick up a phone and call somebody and say, hey, look, I just got a contract and they threw in an MFN clause. Should I take it? Should I not take it? You could spend 20 days agonizing over something like that versus you just pick up the phone, call someone who's been there and MFN clause, super simple. This is what you do.
This is market. This is market.
It saves so much time to have someone who's been there, done that.
Well, and time really is money. One of the most interesting things about a venture-backed startup is they're supposed to get to venture scale or IPO in a decade or so. And so you can only reinvent so many wheels.
Right.
And if you're already transforming your industry,
you don't have the time to reinvent wheels that people have already invented.
Exactly.
And so just pick up the phone and call those people who've invented those wheels, right? But the challenge you have in the South is there's not a lot of people like them.
Yeah.
So, that's what, firms like Valor, by starting with seed here, the hope is that the companies will stay here and they'll get A here and they'll get B here and they'll continue, right? And we can build big companies and big IPOs in the South. That's the hope.
That is definitely the dream. And I tell you what, I really see it happening. And with you, now that Valor's investing our third fund, and our third fund, depending on when you're listening to this, it's for us very real. This is our first full quarter of investing this new fund. Lynn is leading our fintech portion of investing, looking for the next frontier of fintech founders. Is the South a good place to build a fintech company? Let's start with the basics.
Sure. Well, first of all, let's start with the basics. This stat might not be exactly perfectly correct. It might be a little dated, but something like 90% of all payments go through the South. What I mean by that is the largest processes are here. So, when you think about fintech is about money, it's about moving money. Most of the money that's moved, at least in this country, happens here. So it is a great place.
It's a great place.
It's a great place for fintech, so that's point one. And then if you've got a lot of these big companies here, you've got the FISs and the Fiservs and the NCRs, and you've got these, and they all are trying to innovate, but they're also great potential customers for fintech startups. They can be hard because they're big companies, but they are great potential customers. So you look at, the South as having just a ton of fintech knowledge, although some of it's old school knowledge, but a ton of fintech knowledge and a ton of fintech companies here. And then you look at putting innovation on top of an industry that is ripe for disruption.
You talk about every time we
Ripe
speak.
for disruption. I just think there's a ton of potential for fintech in the South. Absolutely.
Fantastic. Well, and when you're looking for a founder and you're thinking about backing a founder and you're developing your investment memos or thinking about talking to our IC, what are some of the things you find most compelling in fintech founders today?
I don't know that it's that different than what I find compelling in any founder, to be very honest with you, right? But I mean, what are the things we all look at? You look at the founder, you look at the team. That's critical. Most companies have some form of a pivot over their journey. So you've got to invest in a person or a team that you think can actually manage that pivot, and figure out how to react to a changing market. So you always look at the founder, you always look at the founding team. That I always put a ton of weight into that. And then I put a lot of weight into how big is the problem they're solving. The bigger the problem, obviously, sometimes the harder it is to solve, the longer it is to take.
In
And so
fintech, they seem like they're all really huge problems.
they can be really huge, but I also sometimes see a lot of fintech companies confusing a product feature or enhancement with a business model. So there's lots of, tweaks and features and things that can be done anywhere in fintech. Lending can always be better. Credit experiences
It can all be
everything can always be better.
faster.
Everything can always be better, faster, but is that a business or is that just a feature, right? So I'm really looking for fintech startups that really are a business, not a product or a feature. And then, the next question is, how disruptive are they? Are they working within the ecosystem? So are they working with the issuers, the processors, the acquirers, or are they doing something outside of that ecosystem? And then you start to think about the sales model and what does that mean for it? But I believe fintech is ripe for disruption, but that doesn't mean that you have to compete against the existing ecosystem. It can also mean that you can help them make their ecosystem better. Either one could be very exciting.
One of the things I love about you as a founder is you really got depth in fintech before founding Partalytics.
Yeah.
And you did that through helping to build Capital One as their COO. What are some of the things you draw from that experience in classic banking, transformational banking, that you bring into your role now as investing?
Yeah. So first of all, I was COO of a division. Capital One itself does not have a COO, but they've got all these different divisions. So they've got presidents and CEOs. So anyways, Capital One taught me how to think. I don't know how else to say it. They taught all of us the discipline of thinking, of evaluating a problem, thinking about that problem holistically, getting counter opinions. If there's one thing I learned at Capital One, it's get an opposing opinion. And so that discipline in teaching us how to think, I mean, the CEO of Capital One has a saying, he used to say EYA, not CYA, expose, not cover. And, that motto has stayed with me. So
I see that in the way you work today about because you are unafraid of contrarian opinions and you might have one yourself. And the way you handle that gracefully and aggressively actually helps make us stronger. But it's interesting to hear that some of those roots go back.
They go all the way back to Capital One. And that critical thinking that they taught all of us, including me, I think really helped me as a founder, because one of the things, I know you see it, I see it sometimes with founders, they get so caught up in their own idea and their own business, they can't see that they've got to do something different until it's too late, right? And I think the more you can constantly, you have to believe in yourself, you have to believe in your business, but you have to constantly be saying, could I be doing something different? Should I be doing something different? Is there a different way? That I think makes a really good founder.
I agree. And I also think that, as VCs, we can get very caught in our own space that it's a venture backable founder, but that's less than 1% of founders. And one of the things for any founder listening that I would say is, know yourself, like know your own ambition level. Your ambition level may not be to run a venture backable IPO on NASDAQ, and that's okay. Like, you can be an amazing founder and have an incredible gift to give in business as a founder, building a great company that isn't going to ever IPO. So there's different types of founders for different
Absolutely.
problems.
Absolutely.
And I think one of the challenges of building a venture firm in the South is that since there are not many models, founders are thinking, they don't know when to come to
They
venture.
don't even know when to come to venture because it's not part of their lexicon. It's not a part of, the South still has a lot of really big companies. So this sort of startup thing is just not a part of our lexicon yet. And, that too, we have to change. But I go back to, there's just no logical reason that the South doesn't have more successful IPOs and more successful founders. It's purely because we just don't have the money and then we don't have the ecosystem around them. So, once we start changing that, which we are, we should have just as many successful founders here as we do anywhere else in this country.
Absolutely. In fact, in the show notes and on the link for this video, I'm going to post the direct link for you as a founder to get in touch with Lynn with your fintech startup. She has her own input form. What can I say? I mean, but she's looking for the next generation of fintech founders. And if that's you and you're listening to this and you're like, I wish I knew Lynn, your dreams are about to be realized, share some information. And if you're on that landscape that she's looking for, you're going to be talking with Lynn about it. So one of the things I'm curious about though is, what's different about being on the other side of the table now that you've moved from signing term sheets in one letter block to the other?
Yeah, I think the two things I've been most struck by. The first is founders really do come in all shapes, sizes, and in colors and everything else in between. We have founders who are introverts, huge introverts. I would have never really thought that possible, but yet it turns out that as long as you know that you're an introvert and you need extroverts in certain other places in your company and you can hire that team, you can be a great founder. And I'm just using that as a very silly example, but they really do come in all, there is no recipe for, you have to have this kind of skill set to be a founder. It's really, do you have grit? And do you have a good idea? And, can you motivate people to work around you, get around you and believe in this idea? And lots of different ways that can be done with lots of different leadership styles. So I've been really surprised by how different all of our founders are.
Yeah.
Even when their businesses are at very much the same sort of state.
We don't have a type.
No, we don't have a type.
It's true.
We don't have a type. There's no, you don't have to have a degree from the place and you don't have to have, there's no type, there's no, and then the other thing I've been really struck by, and this is probably a testament to Valor, VCs actually do care about founders. I will tell you, it felt like over the years, sometimes I always knew there were a couple of VCs really on our side, but sometimes it just felt like, we're just a cog in the machine of their 120 companies and they hope a couple hit and they don't really care which one hits and which one doesn't. Sometimes it felt that way as a founder.
I think those VCs exist.
I think they do too, but I will tell you, not just Valor, even the VCs I've met around here in the South, they actually do care about the founders. And maybe that is unique to the South. Maybe that is part of the Southern charm we build or bring, but VCs care about making money, but they want to see their founders succeed. They want to see them create generational wealth. They want to see them create the next big batch of companies. And so that's been exciting to see.
Absolutely. Well, I think it's particularly important at seed. So, maybe a little bit later in the capital stack, it does become a little bit more of a spreadsheet exercise. Do we have a fund size? Does this going to work for us?
Yep.
But the truth is, at seed, even before I was a VC, I encouraged founders to find that right lead investor. Because that person should have your back in multiple ways. They don't know everything. But they know someone who knows the answer to your questions. And if they believe in you, then they're going to give you that time and access, and you're going to get access to the best of the best. That's really important. I mean,
that board member that I talked about that we, literally, I took a pay cut to get him on my board. That's the way to think about it, right? When you're taking a different valuation, I took a pay cut to get him on my board. He ultimately made the introduction to the first big customer that broke it open for us.
wow.
He ultimately made a really critical introduction to the right banker at the right time for Series C. I mean, there were moments where it was just like, we couldn't have done it without him. And, lots of times he we could go months without talking to him sometimes, especially, as we got way more mature. But, when we needed him, he was always there.
Lynn, this has been a great conversation. I'm sure a lot of fintech founders are very busy filling in paperwork to get in touch with you. If there was,
Be patient, be patient.
if there's one thing, you'd love to share with the next great fintech founder, is there any piece of advice that you would share with them today about what it takes?
I get what's not, again, this isn't unique to fintech. I give all founders this advice, and I've been giving this advice for decades. First piece of advice, guys, it's your company. In the end, it's not your VC's company, it's your company. You need to get lots of opinions, you need to get lots of advice, but in the end, it's your company. You gotta trust your gut, you gotta run with it, and you've got to drive the business. You can't rely on your VCs or anyone else to do it for you. Related to that is a sprint, not a marathon. It's a marathon, not a sprint. Sometimes it feels like a sprint, not a
It
marathon.
does.
This is, Lisa said, this is usually going to be, for many, this can be a decade-long journey. So, keep that in mind. If you're starting a company because you think you're going to make a quick buck, and that's the only reason you're starting it, that might not be the best way to be thinking about it. Have fun. I look back at Cardlytics and it was some of the most fun I've ever had in my life. It was also some of the most stress I've ever had in my life, but there were so many fun moments along the way. And then the last piece of advice I'll give you, and this is probably the hardest one, I'll say it succinctly, fire fast, hire slow. Your money's precious. I see founders get money and the first thing they do is hire something, and often the something tends to be a friend who may or may not be as well qualified as they should be for the role. And then you're with this person and they're helping you, but they're not quite as good. And so then you have a hard time figuring out when to let them go. By far, the hardest thing for almost any founder, it's because we're all human, but a hiring decision should be done very slowly, very carefully, very thoughtfully. A firing decision should be as well, but you got to make sure that as soon as they're not going to make it, they need to go because they're costing you time, money. And if you're not sure if they're the right person, then wait. Interview more. I know it feels terrible that, you've got stuff to do and isn't a body better than nothing. It actually isn't, especially when you've got limited resource. When you're talking about a seed round, you don't have that much money to get it wrong. You can't make a bad hiring decision if you've only got $1 million check. So,
well, you can't survive a bad hiring decision if you fire very fast.
if you fire fast.
So, yeah.
Mhm.
Yeah. Learning to manage a team is a skill.
It is.
And I think founders should give themselves a
Yeah.
little bit of grace on allow yourself to learn that skill and accept that it is a learnable skill. But you're going to make some mistakes, and that's okay. They won't kill you as long as you do what Lynn advises, and when you know they need to be let go.
Let's put it this way. I like many, we've all had to fire people in our career. It's never fun. It's never easy, but it is something you have to do. I've never woke up the next morning and said, God, did I do the right thing? I always woke up the next morning and said, I wish I'd have done that 6 months ago.
So, true words. Well, thanks for all the real perspective and advice.
Yeah.
And I'm really excited to see the deals that you'll be leading this year and the next few years with this fund. So onward and upward. And thanks for your time today.
Absolutely. Absolutely. Go Fintech. Thanks, everyone.